Welcome to the Facebook Live by the Small Business Development Center at the Florida Gulf Coast University. My name is Neil Shnider. I'm a CPA and a CVA. Many of you don't know what a CVA is. CVA is a Certified Valuation Analyst. What we do is we help people understand what the value of their business is if they want to buy or sell a business. I'm also an entrepreneur. I had a chain of drugstores in the Ohio area, and I built medical buildings. So I've been where you are. I'm one of the Small Business Development Center consultants at the Florida Gulf Coast University, and we provide consulting to small businesses. Either businesses that are starting, businesses that are growing, businesses that want to buy, businesses that want to sell. We have expertise of professionals at the Small Business Development Center in Fort Myers at the Florida Gulf Coast University in every expertise and in every area of business. If you like this video, I hope that you share it with your friends. Anybody that would be interested in understanding something about the topic that we're going to talk about today. So let's get to the topic. Today we're going to talk about how to differentiate between cash and profit, loss, and balance sheet. So what we're going to do is we're going to talk about the cash position of a business and why the cash isn't always what the profit and loss statement or the income statement says, and how to analyze and determine what the differences are. Because as small businesses, we have to understand where we're getting our cash and where we're losing our cash. Because without cash, it's the bloodline of a business. So let's start there. We use the word profit and loss. Some people use the word income. They're called income statements or profit and loss statements. All businesses that use software can run a report that gives them the profit loss of the period in time in which they're running. For example, a profit and loss statement will show how much revenue or sales that you generated that period of time and how much expenses it cost you to generate those sales. The difference between that will be your profit or your loss. So the question that I get most of the time is, why doesn't that profit or loss excuse me, why doesn't that profit or loss equal what the cash is in my bank account? Well, there's a lot of reasons, but let me give you the most likely reason. It's because in many cases those sales didn't come in cash, and in many cases those expenses that you have generated to create those sales were not spent in cash. So what happened to them? Well, sometimes customers come into your place of business or buy services from you, especially services, and they charge it. If they charge it, it's still going to be recorded as a sale on your income statement, but it's not going to be recorded as cash in your bank account because you didn't receive the cash. So where is it recorded? Well, we have another statement that you can run in your financial software called a balance sheet. And that balance sheet records all of the transactions that occur that have to do with what you have, which are assets, what you owe, which are liabilities, and the difference to that is what we call our equity or net worth. So when somebody buys $10,000 worth of services or product from me, that certainly appears on the profit, loss, or income statement as sales or revenue. But if they don't pay for it, it goes on the balance sheet as an accounts receivable. We're all familiar with what's called accounts receivable, but yet it will show up as revenue on the profit, loss, or income statement. Also, if I go out and I buy $1,000 worth of office supplies, and I don't pay for it because I'm going to pay the vendor in 60 days, that $1,000 worth of expense is still going to appear on my profit, loss, or income statement, but it's not going to take cash out of my bank account. Why? because it's going to appear on my balance sheet as a debt, as a liability, something that I owe. So what we have to do at the end of the day is we have to look at the income or profit and loss statement. We have to see how much revenue that we generated, how much expenses it took to generate that revenue, and then we have to move over to the balance sheet and we got to say, okay, what didn't I pay for? What wasn't paid for that I sold? And what did I use cash for other reasons? And how did cash get into my bank account that wasn't part of my operation? Well, let me give you some examples. Let's say that you went out and got a loan for $5,000. Well, if you got a loan for $5,000, you're going to create a liability, which is debt on your balance sheet, and that $5,000 is going to be put into your checkbook. But it's not going to appear in your income statement. Why? Because your income statement has to do with your operations of that period of time, you say. And borrowing money has nothing to do with your operations. It has to do with putting cash into your bank account. Maybe you didn't even put cash into your bank account. Maybe you took that loan and you bought some equipment or you bought some inventory. Because all that did was put an asset on your balance sheet, and therefore it created a liability or debt that you owe. In this particular case, you have to then reconciliate or balance out the profit and loss or income from the income statement with the changes that occurred on the balance sheet. Once you take that bottom line number of the profit and loss of the income statement and go over the balance sheet and say, okay, what happened during that same period of time that affected my cash? Oh, somebody didn't pay me and my receivables went up. My accounts receivables went up. Oh, well, that decreased my cash from that profit that I made. Oh, I did pay for some expenses. How do I know that? Because my accounts payable went up. Well, if my accounts payable went up, then I have more cash in my pocket because I haven't paid my vendor yet. Oh, I went out and borrowed $5,000 and I put the money in the bank for operating cash. Oh, well, then my bank account went up by $5,000, but it did not change my profit or loss of my P&L statement. I hope those examples help you to understand that typically you will not be able to reconciliate your bank account just with your profit and loss statement, but you need to combine the balance sheet with the profit and loss statement so that you get the whole picture. And that's what a business has to understand. Because if you don't understand where your cash is going, you won't be able to figure out how to increase your cash flow. Because cash is the lifeblood of a business. The same, it's the lifeblood of your personal life. Without cash, you can't pay your automobile loan payments, you can't pay your house payment, you can't buy food for the table. Cash is where it's at. So we need to concentrate on that. Let me give you a couple things I'd like you to take away to this. First of all, I'd like for you to take away, to go back to your accounting software that you use and run a income statement. Take a look at it. Run a balance sheet. Take a look at it. Try to see, during the same period of your last bank statement, try to see if you can come up with approximately the same number. If you can, you'll say, wow, does that work great? And now I really understand what happened to my cash. If you don't do that, you'll still be in the black. You won't understand. You'll still be in the unknown. But if you can do that, you can then have a light bulb go off and say, hey, this is really cool, you say. The third thing I'd like you to do is I would like you to be able to figure out how you can improve your cash. So it's important to understand how to improve your cash by understanding where your cash went. And by taking a look at both the balance sheet and the income statement together, you're able to then say, okay, what happens if I can do this? How is that going to affect my bottom line? Say. With this in mind, I certainly will take any questions. If you click the button that is below this video, you can put in your questions and we'll be able to get you the answers to any questions that you might have. Also, remember that we're here to help you. And certainly feel free to call or email the SBDC at the Florida Gulf Coast University for our confidential, no-cost strategic one-on-one consulting. And hope you have a great day, and I hope that you accomplish your goals in your business.